Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. The markets have been tumbling, especially if you look at the momentum has been very bearish. The fear on the street is very high. Dow Jones, if you look at, corrected right from around 36,000 back towards 30,000 levels. Again, the cause of concern is the inflation, and if you look at the Fed, which has done a 75 basis point rate hike to control the inflations. Now, if I look at the momentum, yes, the bearish momentum continues on the Wall Street as well as the D Street. As we are the follower of the US markets, most of the global markets are trending bearish in line with the US markets. Though we might have outperformed against the US markets, but the structure seems like the crash is coming to an end. If I look at, let's start with the Dow Jones first. If I look at the Dow Jones chart over here, the first chart, if you look at every time the Dow Jones hit the highs, that highs act as a huge support zone for the bullish momentum. Now, if you look at right from 2008, 2007 6 7 highs were acted as a support back in 2013-14. The 13-14 high was acted as a support zone when the pandemic fall happened, and now the pre-pandemic high, which was somewhere around 29,500 20,800, will act as a major support zone for Dow. Now, if you look at the lower panel over here, the RSI, whenever the RSI tests around 30-35 zone on the weekly scale, it tend to give a bullish momentum. Only once when the pandemic low has happened, and in back in 2008 2009, where the financial crisis happened, we saw it falling below the 25 zone and testing around 20-21 levels. But so far, if you look at it historically, every time it tests around 30-35 zone, the momentum comes back into the bullish scenario. Additionally, if I look at the second chart over here, if you look at the same chart where I have plotted 200 weekly exponential moving, which is termed as long-term average. And if I look at these average, if you look at the 200 weekly average, it is right placed around the previous highs, which was around 29,500 2900 levels. And if you look at, it will act as a support zone. Now, even if you look at the historical move, apart from 2008 and pandemic, we have always seen that the 200 weekly exponential moving average acts as a support zone on the Dow Jones. So this were again the black swan event, the financial crisis of 2008, the pandemic. As of now, again, if you look at the rising inflation is there, but if you look at the historical move, 200 weekly exponential moving average plays excellent on the Dow chart. Coming on to the Indian charts, look at the Sensex over here. Okay, now if we look at the similar lines, Sensex chart over here, 2008. If I look, just connect the highs, the support is placed right at around 48-49,000 levels. Plus, if you look at the previous the two red lines over there, the previous high may also act as a support zone for Sensex. So I think we are trending at around 52,000 levels. Probably, I think the correction might end between 4850 or probably 51,000 levels, where we are looking at the multiple support zone where Sensex is holding on in the 50,000 51,000 range. So yes, comparing with the Dow, Sensex is also holding its support zone. Again, onto the lower panel, if you look at the RSI over here, back in 2008, back in 2020, again the financial crisis and black swan event with the pandemic, where RSI has slipped below the 20 zone. But if you look at whenever it tests 30 zone, Sensex seems a very excellent opportunity for the bulls. Additionally, if I just add the average over here, like we did 200 exponential moving, which acts as a support on Dow, onto the Sensex, 100 weekly exponential plays a key important role. Now, if you look at the whole right from 2008, whenever prices test or hovers around 100 weekly exponential moving average, it acts as a huge support zone. Okay, so similarly now we are back towards 100 weekly exponential average onto the Sensex, and we have seen Sensex going 2.6 2.7% away or below the 100-week exponential line, come back very strongly. So yes, if I just look at in line with the levels, what the trend line is showing, what are the averages showing, probably I think 48,000, 51,000 plays out to be a very crucial buying opportunity for investors looking at the Indian as well as the Dow chart. But if I just look at the fear and greed over here onto the Sensex chart, if you look at this month, this is the monthly chart of Sensex where I've added the fear and greed indicator. Now, if you look at the fear, it is right at the lowest level. The fear is at the highest level, and if you look at this indicator, is going to at the lowest level. It means the fear is very extreme in the current market scenario, which was never seen in 2008 as well as 2020. Though this is the monthly chart, and we still have 15 days to go into the monthly chart to close. But yes, looking at the structure as of now, when the markets are trending at around 45-46 weeks low, the momentum is very bearish, and the fear is on the street is at an extreme level. So I believe when historical move, 2008 when this fear was tested, 2020 when this fear was, though 2020 was an one of its kind where we saw V-shaped recovery. But if you look at the 2016, 2008, where the momentum was coming back very strongly after an extreme fear. So I believe it is a time to accumulate for an investment per se. Or if you look at the Dow and Sensex, both are trending at a long-term support zone. So yes, it is a good time for an investors to look at. And again, as a trader, the risk of gaps will continue because the volatility is very much higher comparing with the US markets as well. So yes, as a trader, I would suggest look for a low leverage position sizing, and look for a stop loss based trades. Don't risk high. But as an investor, I think it's a good time to accumulate the best fundamental stock or best stock you think that which are outperforming in the current market scenario. Look for an accumulation in those kind of stocks. Signing off, Brijesh Bhatia.